Everyone. So, good morning. Today I'm going to explain about the a term which you might have heard about call money, term money, notice money. Okay. So basically it is not for the retail investor, it is for institutional investors. And the this is used this is like my money market instrument. And here a bank or the commercial bank or institution take a loan from each other for like their for one day or more than one day. Okay. So it is they take this loan for their like CRR, like cash reserve ratio, to be uh, properly in the should be maintained, and also they take this for the margin. Okay. So I will explain you in detail in the video. So let me share the PPT. Okay. So the call money is a type of short-term loan which is provided by the issuer to the borrower. Okay. And when the lender demands it, the borrower has to pay back immediately for the call money. Okay. So the call money is the most important segment of the Indian financial system. Okay. And this call money allows bank to earn interest. So there will be a call loan rate which has to be paid to the uh, issuer by the borrower. Okay. So this the call money market essentially serves the purpose of equilibrating the short-term liquidity position of banks and other participants. Okay, so they wanted to take a liquid. Suppose requirement came on the bank side, like somebody has requested for loan of 100 crore or 200 crore from the bank, and they don't have that much of loan with their self. Okay, so on that case, they can borrow money from other bank because it is coming lesser, like 5% or 6%. And when they are going to give this loan to other individual who wanted a corporate, so they might be charging 8%. So that spread of 1% or 2% will be advantage for the bank. Okay, so for that reason, they can go for the call money or the notice money. Okay, so this under call money market, the funds are transferred on overnight basis, and under notice money market, funds are transacted for the period of between 2 to 14 days. Okay, and for the term money, it will be greater than 14 days and less than 365 days. Okay, so this call money market accounts for a major part of total turnover of our money market. Like we know, like in money market, there are other financial instrument also, like certificate of deposit, commercial paper, and all. But this call money market, call money, it's account for major part of total turnover. Okay, and this brokerages use call money. Brokers basically use the call money for the funding to support the margin accounts also. Okay, for the interest of their customer who wish to like leverage their investment. So it is beneficial for broker also. This call money taking this uh, position in call money, and the funds can shift quickly between lenders and brokerage firms without any collateral also. So they transfer the money for 1 day or 2 day between each banks, like on the basis of credibility. So they don't have to put any collateral, and also it is happening on the basis of credibility of other banks or the corporation only. So there will be less of paperwork and all. So it is very easy method to take a money between each other. Okay, what is the features of call money market? Okay, so the call money market is highly liquid market. Is like I told you, it is very highly liquid. Okay, and this call money market is highly risky and volatile. So this call rate get changed in a day or hour to hour basis. So it is very highly risky. Okay, depending on the requirements, and no security or collateral is required to cover the transaction in the call money market. So no collateral is been placed, and it is basically an over the counter market without the intermediation of brokers. So this can be done through, like there is one NDS call NDS site is there. So where uh, after like over the counter, the rate has been decided, like how much they will be charging to take a loan. we have to they have to put like within 15 minutes whatever the discussion happened between them, like the quote price they have to mention. Okay, so this over the counter market without the intermediation of broker. The participants in the call money market are scheduled commercial banks, non-scheduled commercial banks, foreign banks, state, district, urban cooperative banks, brokers and dealers in the security market, and primary dealers. So these are the participants who can borrow the money. Okay. What is the need? As I explained you, it is one reason is cash reserve ratio. Like this CRR from the RBI side, like it is 4.5%. Okay, you can check it on the RBI site. You can able to see. So, or this banks like commercial bank have to maintain this reserve requirement. Okay, so this is one of the reason, and every fortnight banks have to satisfy the minimum reserve requirement, which often entails borrowing the call notice money. It is the same like CRR and SLR, statutory lending ratio. Next is this call rate. Okay, so this call rate is the rate of interest paid on the call loans, which is highly volatile. Okay, this it is like the same interest which you are paying on taking the loan. Okay, the volatility of the call rate depends on the demand and supply of call loans. Here, the call rate is inversely related to the short-term money market instrument. Okay, when call rate is very high, bank raise more funds through certificate of deposit. So when the call rate is very high, so the bank not go further like taking a loan from each other, like from the bank, but they go for the certificate of deposit. Okay, and the certificate of deposit, the maturity is from 7 to 360 days. So through that they will raise the loan, so they have to pay less compared to in case of call rate. Okay, but when the call rate is low, like one bank is giving fund to other bank at low rate, so banks fund commercial paper by borrowing from the call money market. Okay, and earn profit through arbitrage between money market segment. Okay, so arbitrage is basically, if I give you example of arbitrage, so suppose in one market you buy one product at 100 rupees, and in the other market it is selling at 110 rupees. So what you can do is like you buy it from at 100 rupees from there, and you can sell it here at like less price, like 105 or 102. Okay, so you take the profit of 2 rupees or 3 rupees, whatever the difference. So arbitrage is that, the term arbitrage. Okay, the large issues of government securities affect call rate. Okay, when banks subscribe to large issues of government securities, call rates go up and vice versa. So if like government issues securities in the market a lot, so retail investors go for this government security, like they subscribe to this government securities more. Okay, so due to which they withdraw the amount from the bank, those who are kept with the bank. Okay, the investors, institutional investor also, and they buy this government securities. So due to which like the rate get increased. Here, the eligible participants are free to decide on interest rate in call notice money market. So basically, over the counter, like also between banks, they can decide like what rate they wanted to give. So they can negotiate on this rate term, how much they can able to pay. And the calculation of interest payable would be based on FIMDA's like Fixed Income Money Market and Derivative Association of India. So one thing is like they can negotiate, and the other standard thing which is like calculation of interest payable would be based on this FIMDAS. This is one of the site and one of the regulatory uh, entity who decide this interest payable. Okay, and deals in the call and notice money market can be done up to 5 p.m. on the weekdays and 2:30 p.m. on the Saturday, or as specified by the RBI from time to time. This liquidity conditions, reserve requirements, liquidity changes, and gaps in the foreign exchange market also influence the call rate. It is mandatory for all the negotiated dealing system members to report their call and notice money market deals on NDS. Okay, negotiated deal system. Deal should be reported within 15 minutes on NDS, irrespective of the size of the deal or whether the counterparty is a member of NDS or not. Okay, this is I already told you. In case there is a repeated non-reporting of deals by an NDS member, it will be considered whether non-reported deals by that member should be treated as invalid. Okay, so that's all from my side. Okay, and if you have any doubts regarding this, like terms, okay, so you can comment on the video. So I will create a separate video on the FAQs. Okay, so yeah, that's all from my side. Thank you.